Hello and welcome. You're watching Startup Street. I'm Ritu Singh, and with me as always from the Mumbai studio is Shruti Mishra. Here are the top headlines from the startup space that we're tracking today. Agri-supply chain startup Superplum raises $15 million in a Series A funding round. This will be led by Eric Ragtaz, who was a former partner at private equity firm Hellman & Friedman. With this, Ragtaz becomes the latest to join Superplum's long list of angel investors, which includes Flipkart co-founder Binny Bansal.
Food tech startup Poshn bags $4 million in equity and $2 million in debt in pre-Series A funding led by Prime Venture Partners and Zephyr. The company plans to use the capital to expand business to Southeast Asian and Middle Eastern countries.
Gyan Live, an edtech platform dedicated to state-level government exam preparation in Gujarat, secures strategic investment from Class Plus. Gyan Live claims to have been profitable since inception and plans on using fresh funds to scale its business further.
Peak 15-bagged Mindgrove launches what it claims to be India's first indigenously designed system-on-chip named Secure IoT. Mindgrove says its chip is designed for Indian electronic manufacturers to deliver 70% of high-end features at costs that are 30% lower than competitors.
Google awaits judgment in the United States after the culmination of closing arguments in its landmark antitrust trial over the weekend. The U.S. Justice Department has charged the search engine giant of being a monopolist that illegally abused its power to boost profits.
Twitter founder Jack Dorsey quits the board of decentralized social media platform Blue Sky. The platform has been touted as a less toxic alternative to X, formerly known as Twitter. Dorsey shut down his Blue Sky account months earlier, according to The Verge.
All right, so those were all the headlines that we're tracking for you today. Now, in what's brewing, food tech startup Poshn has announced that it raised $4 million in equity and $2 million in debt, which takes the total to $6 million in a pre-Series A funding round. Now, this takes the total funds raised to date by the company in equity to more than $8 million. It plans to use these fresh funds to expand its business to Southeast Asian and Middle Eastern markets, and it also aims to build an innovative stack of solutions which will help it address gaps in the system. Joining me now to discuss these plans and more is the co-founder of the company, Shashank Singh. Shashank, welcome to Startup Street. Thanks very much for your time here. Start by telling us about this funding, why this mix of debt and equity, the $6 million that you raised. Give us some details on that.
Yeah, so I'll start off with what Poshn is exactly trying to build. And India and Southeast Asia has been the food basket to the world. With this startup, we are trying to enable the MSMEs in the segment who are the food processors of commodities like flour, rice, edible oils. And we are trying to bring them at par with any large FMCG company and look to be the suppliers to the world. So that's the background on the company that we have built out. As rightly mentioned, we have raised $8 million in equity till date and close to $2 million in debt in this round, couple of million in debt prior to this as well. We are looking to solve for all the issues that are plagued in the supply chain, right from bringing in distribution for these MSMEs. They have typically lacked for that, bringing in capacity utilization for these MSMEs because they do not have the view into how much they can sell on the year throughout, and then working capital solutions as well. So that's the background into it. That's what we are trying to build out. We are trying to build out based out of India. So tech solutions can't be borrowed from the Western economies. So that requires a lot of effort on our part to understand the problem statement. And hence, large part of this funding is going to develop that tech and adding in the new additions to the team.
But Shashank, tell us more specifically what you plan to do in terms of deployment of the funds. Some of it, of course, is for what you outlined, and some of it is to enter the import-export opportunity you're eyeing.
Right. So as I was mentioning in the beginning, now Southeast Asia and specifically India has been the food basket to the world. There is a lot of exports in agro-commodities that happen from India. And that requires specific set of solutions to be built in. We are looking to go very aggressively on the import and export market. That would mean that we need to build in those capacities ourselves from a tech stack perspective. So a lot of guys we are adding to build that tech stack specifically for import and exports. And other than that, we will require specific talent also to come in, which will help us expand that footprint. To begin with, for this particular financial year, we will be targeting 6 to 7% of the revenues coming from import and export, and we'll be building capacities for the same.
So 6 to 7% to begin with this year itself, and over a period of time, how important a part of your overall business is export-import going to be, and how much of your sales and revenue is it going to continue to generate, say, over the next 5 to 10 years?
Yeah, so 10 years is a very long period of time in a startup's journey. So let me take a lens of say 3 to 5 years, and we are looking to expand 30 to 40% of our revenues coming from export markets. We'll also be focusing on the geographical expansion. So as I mentioned, to begin with, we are looking at Middle Eastern as a market, specific sets of Europe. But as we grow, we'll be looking at the greater parts of Europe and Americas as well.
Well, thanks for giving us that 3 to 5 year picture. Of course, we're assuming you have a longer term vision, which I'll just get to in a bit. But, you mentioned the revenue, and I was reading you said that the revenues for the company have risen sixfold from FY22 to FY24, and that you are EBITDA profitable. Could you give us specifics on whether revenue can continue to grow at this kind of a pace going ahead, say in your 3 to 5 year horizon, and how soon do you expect to be fully profitable, not just on an operational basis?
Thanks for that question. And we as an organization have had a fundamental belief that in B2B segment, there can't be any growth without profitability, because the moment you are growing without profitability and at some point of time you are looking to switch back to profitability, that growth becomes redundant. So from day zero, we have very critically focused on growing along with profitability. We have grown 6x in last 3 years. We are looking to maintain that trajectory because there is no dearth of market for the same. It's a $800 billion market that we are looking at. So at least for next 3 to 5 years, we expect to maintain the same growth trajectory. On the questions of profitability, we have kept an internal target to be PAT profitable this particular year itself. So in FY25, we will be PAT positive.
All right, so you will be profitable in this current financial year. A quick word, Shashank, you've cemented your position in the B2B wholesale segment. That's what you've been doing. But, going forward, are you looking at more diversified revenue streams, of course, apart from this import-export business that you want to enter into that you've already highlighted?
So the idea for Poshn for being was to enable the food processing MSMEs, not just in India, but across Asia, and try to bring them at par with the global FMCG giants or food processing giants. So that will be the vision statement that we have set out for ourselves, and that would lead to our expansion, not just into the B2B space or the processing that space we are talking about. We will be integrating both forward and backward into the value chain. That means we will be moving on towards the retail side as well. So a lot of efforts are going on to be moving on to the retail side, as well backward integration as to how we can enhance the utilizations and capacities of certain food items that we are talking about. So over next couple of years, we will see our footprint expanding across the value chain and not just into the wholesale B2B segment that we have been focusing on.
I was wondering, since, if you were to complete the bouquet of offerings, is there something along the lines of financing solutions that Poshn would be looking at in future?
So if you look at the segment, there are dominantly 3 to 4 legs that we look to bring in. So distribution has been one of the keys. Working capital has been the second leg. And then there are SaaS solutions we are bringing in, which come from digitizing the entire ecosystem. So already in some form, we have been bringing in the financing solutions for our suppliers. As we are moving forward, as you would see, ICICI Bank has also come in board with us as a working capital provider to us. So as we are moving forward, we'll be partnering with more ecosystem players, right from banks and NBFCs, to ensure SME inclusion, financial inclusion that can happen.
All right, Shashank, thank you very much for patiently answering all of those questions. Pleasure speaking with you.
Thank you. See you. Same here.
All right, moving on from the food tech space on Startup Street, we're going to talk about everything from roti kapda to now makan. Home improvement platform Arrivae has raised 21 crore rupees from CaratLane founder Mithun Sacheti. Sacheti will also join the board of the company. Founded in 2018, Arrivae provides end-to-end design to manufacturing services for home interiors and improvements. The company claims to have a catalogue of over 1 million elements. To tell us how Arrivae is bundling furniture and furnishings with financing. Joining me now is its founder, Yash Kela. Yash, many thanks for joining us on Startup Street today. So first, tell us what is Arrivae's USP? Tell us how are your designing and manufacturing services unique? And most importantly, if you could talk to us about the incremental loan you offer to your customers.
First of all, thank you so much for giving us the opportunity to come and represent Arrivae over here. Um, you know, doing a home is a very cumbersome process and is a very painful process for most of the customers, and particularly for people who spend between 2,000 to 7,000 rupees a square foot. And Indians have always been inspired with European designs, but the biggest problem statement that Arrivae is trying to solve is how do you give the larger customer base of India the access to those European designs in a defined time, price, and convenience. So Arrivae's diversity offering European designs at Indian price points, as well as over a period of time, the integrated supply chain that the business is building, which will lead to a better customer experience. And over a period of time, I think the customer experience that the platform can provide would become the biggest defensibility for Arrivae.
And what about the financing aspect of it, if you can elaborate on that point?
So just to give you a background, see, for any large customer purchase, whether you take cars or education, financing would typically be 50 to 70% of the financing. In home improvement, there is a product that exists with a lot of financial institutions, but for Arrivae's revenue, or as well as for the larger industry revenue, it's only 10% that customers use to finance, because people have already stretched themselves for home loans and they do not want to stretch themselves more. As well as what happens is it's a very fragmented industry. So what we are trying to do is, as a top up to the home loan, attached to the home loan, or possibly as a personal loan, we are trying to integrate this also so that the customer can pay such a large ticket size over a longer duration. We are in the very early stages of building that proposition. We are working with 2 financial institutions for that. And as we are able to better and integrate the 3 players, which is the financer, the developer, as well as the customer, and stitch this experience better, we would be able to have more traction on that product. But our hope is over a longer period of time to have at least 30-35% of our revenue stitched through that product.
Okay. So picking up from what you just said, take us through the partnerships that you've built so far. Who have you partnered with for financing? How many vendors do you have on board? And how many clients have you served till date?
So Arrivae has existed for 6.5 years. It has been a slow journey. And it was important to do it that way because we had to stitch the entire supply side of the ecosystem first together. And the industry is at its nascency. Particularly, I think, to answer your question on the financing part, these are larger listed companies, non-banking finance companies that we are working with at this point of time. One of them is Aditya Birla Housing Finance. And we are trying to stitch this product, as I said, integrate the developers, the financer, and the customer in a process that all of them would be able to adhere to, including their compliances. Arrivae, in its journey of 6.5 years, would have delivered 10,000 plus homes and would have serviced retail customers closer to 4,500 customers, and the balance would be B2B offerings that we would have serviced to ensure that we build our capabilities and get our processes better, as well as get our prices down.
All right. So now let's talk about the 21 crore rupee Series B fundraise. I believe you plan to go deeper into existing markets and strengthen your supply chain. If you could elaborate on these plans and also take us through your current business growth numbers.
So, Shruti, this is an add-on to an existing round that Arrivae did. Arrivae has raised money from people that we believe would add a lot of value in the journey of this build-up. So this was an add-on round in which Havells participated along with investors who had previously supported the company. Mithun's round is an extension to that, and Mithun's experience in design, the customer obsession and experience that they've built, as well as omni-channel distribution benefit the franchising they did, we believe would add a lot of value to Arrivae. In terms of growth plans, I think at this point of time, see, this is a business which is a business to go deep. Just to give you a perspective, in Mumbai MMR region, only the deliveries with one larger financial institution is closer to 1,87,000 homes. So the number of deliveries are very high.
Okay.
I think across 903 societies only, there would be some lakh plus apartments for delivery. And we have broken down Mumbai MMR into 13 clusters, and each cluster has at least like hundreds of societies. So our first attempt is to ensure that in select societies, we get 10% market share. And the first target is, can we get to 1% revenue share in Mumbai MMR as a region, while Arrivae is present in 3 other geographies.
All right.
On the supply side, we are trying to integrate our solution through one supply chain. Today, we work through 4 supply chains, and we are attempting to integrate that in under one roof. So I think that is where a lot of the use of this capital will grow.
Sure.
At this point of time, I think the focus is to ensure that we correct all the input parameters and be aggressive around getting those input metrics right, so that I think we can use that to scale quickly.
Yash, you call Arrivae as India's first made-to-order furniture manufacturing company. So tell us, where is your manufacturing facility? What is the production capacity? And will we see another soon?
So I'll give you some context to this. The government of India is really pushing to ensure that we reduce our imports of furniture. And for that, select state governments as well as the central ministry is giving a lot of subsidies to the tune of 40% in some case. Presently, and I think there's a larger tailwind to ensure that over a period of time, we become a net exporter of furniture. So at this point of time, a lot of focus is to ensure that we integrate all these 4 different supply chains under one roof, so that we can service the customer faster, enable more personalization. At this point of time, we have one manufacturing facility, which is in the vicinity of Bangalore. And we will hopefully, as we hit 75-80% production capacity over there, we would expand in that cluster only, likely in the Tamil Nadu region.
All right, one final question, and if you could answer that quickly. Home improvement, of course, is a lucrative market and involves deep engagement and emotions of consumers. So give us a price range of your products, projects. What kind of budgets do your consumers need to have?
So, ma'am, I think the focus for us is, can we service the customer who is willing to spend between 2,000 to 7,000 rupees a square foot in a defined time, price, and with a higher degree of convenience. Typically, I think customers in a warm shell spend between 8 to 12% of the value of the house. Arrivae has 4 different product offerings, which covers home values between 80 lakhs to about 3 crores. And in Mumbai, I think that varies between 2 crores to 10 crores typically.
Sure.
The contractor typically services people starting from 1,000 rupees a square foot, and higher-end interior designers service people from 15,000 rupees a square foot. So if one can get the blocks right, I think that 2 to 7,000 rupees a square foot is a big market. Home values which are ranging between 80 lakhs to 3 crores, and in Bombay varying between 2 to 10 crores.
Okay. All right. Unfortunately, we've run out of time, Yash. Many thanks for joining us on Startup Street today, and wish you the very best with all your growth plans.
Thank you so much.
Okay, on that note, we're going to slip into a short break. But up next, Chennai-based startup Mindgrove Technologies has launched its first indigenously designed microcontroller chip. We'll bring you a special report from its Chennai lab on how it plans to make smart devices cheaper. Stay tuned for that.
Welcome back. You're watching Startup Street. Peak 15 Partners backed Mindgrove Technologies has launched India's first commercial system on chip, or SoC. The Chennai-based startup has said this chip comes at a 30% lower cost than other chips in a similar segment. They added that this Indian chip commercially available in this segment, and CNBC-TV18's Jude Sarat visits Mindgrove's lab in Chennai to get a sneak peek at the new microcontroller and finds out what it will mean to the world of smart devices. Take a look.
What you're seeing here is the first Indian-made system on chip, or SoC. Designed and built by semiconductor startup Mindgrove, Secure IoT, that's what they're calling it for now, could help smartwatches, chimneys, washing machines and smart lockers get cheaper while continuing to retain their smart features. Mindgrove's founders, Shashwat and Sharan, say they managed to make this happen by simply marrying the computing ability of a microprocessor and the connecting ability of a microcontroller.
5 years ago, you had a washing machine. Typically, the washing machine might have had a very basic 1 megahertz microcontroller inside it. But now you're asking that washing machine to connect to Wi-Fi and give you status updates. And you're trying to control it from wherever you are. And that requires more processing power. So Secure IoT is a device which integrates these two worlds, the microcontroller and the microprocessor, and also adds a layer of security, because again now we are talking about connected smart devices.
What Secure IoT brings to the table is that the chip is truly Indian at its core. What this means is a wide variety of use cases, more amenable to the local market and at a more attractive cost proposition. Mindgrove also says that the chip has been designed and built for Indian climatic conditions, which means it's as sturdy as can get. That's the key differentiator. Mindgrove says Secure IoT is not only a chip built for India, but for a rugged, rural Indian market that is quickly adopting smart, connected devices. The fact that it's 30% cheaper than competition is a nice bonus.
Online and look for in the suitable e-commerce websites. If you go look at these chips, they'll have a temperature range. It will say 0 degrees to 85 degrees. Smartphones typically come into that picture, or minus 20 to 85 degrees centigrade. You can't do that in India because of the way our geographies are. You have to design to the temperature range that the geography of India is set up for, and that's what we've done.
Both founders say that what truly makes the chip unique is a last mile customization element that is seeing Mindgrove speak to device designers and strike a balance between including important chip features at effective costing.
One of our strategies has been going to high volume customers first, and they will need the final samples of the chip to confirm everything. So what is currently happening is that we are in the process of giving them those samples, getting everything done, because they have given us expectations and in-house tests have passed. Now it's a matter of giving it to them, waiting for them to finish their side of testing, and then we sign and we are ready to rock and roll, if you will.
The idea here is to take the chip into full volume production by the end of the year. As we sign these contracts, we will have the visibility to place that order on the foundry.
The startup says it's confident of selling Secure IoT in overseas markets too, given its sustainability to extreme climatic conditions, from hot and dry to cold or wet within India. However, the fact remains there's still a long way to go before the right kind of fabrication infrastructure is set up within the country. So for the moment, Secure IoT will be made in Taiwan.
The chip is currently not fabricated in India because
there are no foundries.
There are no foundries in India yet. We know that a fabrication plant was just started in Gujarat. Looking forward to that coming up. But we are currently manufacturing outside India. But these modules that we are talking about and finishing with our customers, they will be assembled, manufactured inside India, within the geographical boundaries of India.
But with fabrication infrastructure investments in the pipeline, the future looks bright for SOCs and semiconductor startups. Mindgrove raised $2.3 million in a seed round last year, led by Peak 15 partners. The startup, still in a pre-revenue stage, says it's in talks with new investors, is seeing renewed interest, and may well raise another round before the year end. However, it's tight-lipped about just how much it plans to raise.
The principal focus is sell more and sell even more. So what we may or may not raise would directly depend on what we need to do to enable us to sell and sell more. So number therefore would be dependent on that. If we find an opportunity window that we need to quickly exploit and get into the market, then we'll raise appropriately to do that.
In Chennai, Jude Sanath.
Okay, on that note, we're going to wrap up this edition of Startup Street from Shruti and me. It's a goodbye and thanks for watching. But stay with CNBC-TV18. More news and updates will continue on the other side.